What is going on, traders? Welcome back to the Traveling Trader. Happy Thursday to you. Let us get right into it and get started looking at the cryptocurrency market. And if we take a look at this heat map, what the fuck? Even Tether is down. That is the crypto equivalent of a dad joke. But looking at the cryptocurrency market, if you look at the heat map, yes, things look terrible. However, let us actually get some context into this and look at what is going on the one-day chart. Now, Bitcoin has been respecting all of the short-term trends. Bull flag, we saw a positive breakout, right? We had this bear flag here, then we saw a breakdown, then we saw the Adam and Eve, and we saw a breakout, and now we are falling below support, which was previous resistance of this Adam and Eve here, and we are finding support around the 100-day, depending on which exchange you're looking at. I did send out trade alerts for buy levels on Bitcoin, and one of them was at 96.50. This is not a magical level. It was at around the 100 moving average. It was definitely a logical support point based on Bitcoin's current trend. I do have another buy order at 9100 based off of historical support. This level that we saw July 17th and July 28th. By the way, if you want access to these alerts, that link is in the description. It'll cost you less than a cup of coffee a week. And if you're diamond traders and above, you also get access to the stock trade alerts, which we will go over at the end of the video. But stay with me here. So looking at this, depending on which exchange you're on, that's because Binance did have a maintenance upgrade yesterday. I won't go over it in too much detail. They did roll out some exciting features, one of which is OCO, or one cancels the other. Let us just stay on track and talk about Bitcoin. So on Binance, it didn't have a chance to hit that 100 moving average. However, it did on the other exchanges. This one is Coinbase Pro. It hit that 100-day moving average, and we are now seeing a doji candle forming on this daily candle. However, we do have around 5.5 hours left to close, so that doesn't really mean much at the current time. But usually a doji signifies indecision. If it comes in the midst of a strong downtrend or uptrend, then it could mean a reversal, but you really need that next candle for context, right? Now, what I think could happen, we have to tie all these things together. So what I think could happen, if you look at the total crypto market cap, and Bitcoin's dominance is currently at almost 70% still, right? Here's Bitcoin's dominance. So that's why Bitcoin's chart and the total crypto market cap's chart look very similar at times. And if you look at this, we see that there is a head and shoulders, a clear long-term head and shoulders forming, over the course of 3 or 4 months since May. And we are now below the 100 moving average on the total crypto market cap. Now, just being below the moving average for 1 or 2 candles doesn't really signify much. However, obviously, if the trend continues, it does. But there is a real possibility that we get closer to testing the 200 moving average, a level that we haven't seen since April. And that would take us to around $210 billion on the market cap. The reason I say that is because Bitcoin does dominate most of the market cap, right? Almost 3/4 of the market cap at the current time. And you look at Bitcoin on the weekly, I keep on harping on about this, that Bitcoin should retest the 21 weekly EMA at some point. It has to, because obviously trends can't continue forever, and there has to be some sort of regression to the mean. Now, I'm not even talking about the long-term likelihood of retesting the 100 MA or 50 MA. I'm just talking about the 21 EMA, which is this white line here. Now, if we continue for a couple more weeks, as I've said before, that will be the longest time that that Bitcoin's history has gone without retesting the 21 EMA. So it is inevitable, friends. It is just an unfortunate event that has to happen. However, the longer that we continue on this trajectory, or at least maintain the sideways trading at these price levels here, between 10K and 12K, the 21 EMA will increase in price, and so by the time we retest it, we could be at over $9,000. So being the fact that, again, Bitcoin dominates about 70% of the market cap, I could see an instance where we get closer to the 200 MA led by Bitcoin, obviously, and Where's this weekly chart? There we go. Led by Bitcoin, obviously, and we retest the 21 EMA before continuing the uptrend. Now, the trend is still bullish. We're still on an uptrend, okay? I know when you see bullshit like this on the heat map, it looks like, you know, it looks like doom and gloom, but we're still on an uptrend. And when I set these levels to buy at, right, you know, whether it's 9650 and 9100, the reason I'm comfortable doing so is because I'm trading the trend, right? There's a few types of trading. You have breakout trading where you just wait for the breakout. Obviously, we do that in swing trades. You have trend trading and you have counter trend trading. Well, to me, Bitcoin is still, obviously depends on from where you're measuring, but Bitcoin is still largely on an uptrend. And currently we have this sideways trend. And if we take a regression trend, I'm showing you all my tricks here, but if we take a regression trend and we measure this, you'll see that Bitcoin is in this largely sideways range here. So I am trading that, and until that breaks down, I'm going to continue to trading it, and it's been rather profitable for us playing the swings and just going along with what the market is showing to us at the moment. So that is why I'm comfortable buying at these identifiable support levels here. And if you did follow the trade alert that I sent out, you are up 6% on Bitcoin. XRP, same thing. We did buy at a historically low level, something that we haven't seen since 2017. XRP, depending on which exchange you saw, it hit between 22 and 23 cents. We bought there. We're up around 6% on the trade. It did retrace a bit now. But honestly, I've trained myself to be more comfortable buying when things go down, right? Would you rather buy here or buy at 13,000 on Bitcoin, for instance? There's, you know, I mean, you have to give yourself a chance to win. So when I get posed the question, you know, why would you buy at when it's going down, or why would you buy at 9,600 or 9,100? Well, what else are you going to do, right? You are already engaged in this endeavor of trading. You've accepted the fact that you're willing to take on the risk by trading. So how do you give yourself the most opportunity to win? Well, would you rather buy at easily identifiable support levels, or would you rather buy at inflated price levels that seem to be outliers, at least in the current range, at 13,000 or 14,000? Right? For me, I'd rather take a chance and buy at 9,600 or 9,100, or ladder my buys down along the identifiable support levels. And if the market changes trend and tells me that, hey, you know, the trend that you were currently focusing on is actually fucked, and that trend is no longer valid, you have to be dynamic and adjust because the market is dynamic, right? Anyway, long rant on why I buy the dips and why I think everybody should be buying the dips, but your money is your money. You do with it what you will. We did go over XRP. I'll go over that just a little bit to give a little bit more context. I think that XRP is only here. I mean, obviously you can swing trade like that 6% that we made, but you know, things like this should be traded with the intention of mid to long-term gains, because it could be a while that something like XRP recovers, especially that the Bitcoin dominance is so high, and we are seeing sell-offs as much, if not more, than the buys. As a matter of fact, if you look at something like the OBV, which attempts to measure the flow and outflow of volume, you see it trending downwards heavily, meaning that people are offloading, traders are offloading their XRP. So you can buy the dips, and with the intention of holding long term, obviously within reason, right? I'm not going to just watch XRP bleed, but you know, I'm comfortable buying at 24, 23 cents and just holding for the mid to long term. Looking at Litecoin, you'll see Litecoin, there is an identifiable level here, which was the 200 MA, and it fell below that. And my next buy level was at the wick of this candle here, which was $71. So I have a buy waiting in the bushes like a predator for the $71 mark to hit. And I'm hoping that will hit, because I did have a buy at the 200 MA, bought that already, and I'm looking to average down my buy-in price. Now, again, the market structure on Litecoin, we're still trading sideways for over a month in this range. If the market does change and the market structure changes, then I will react accordingly. I do have one more buy on Litecoin at the 1 fib level. But unless you think that these things are going to go away forever, then, dips should not scare you at all, right? And we're not trading overinflated prices. These aren't, end of 2017 prices when Litecoin was damn near 400, Bitcoin Cash was like $4,000, Ethereum was like 15 or 1600, Bitcoin was obviously 20K, XRP was $3. These aren't those prices. These are, definitely discounted prices according to the price action that we've seen over the last year and a half. One other thing I want to talk about with Bitcoin, just back to Bitcoin for one quick second, friends. Looking at Bitcoin on the 4-hour, you'll see that we are oversold on the RSI, and this typically on the 4-hour has been a great indicator for bounce backs. Now the extent of the bounce back is something that you cannot really measure with certainty, especially with a very volatile asset class like Bitcoin. But you can, with reliability, look at the previous oversold levels and see that it has bounced from those levels. Now, again, the extent is something you cannot predict, but also the length of time is something you cannot predict. So back here when we were oversold in the beginning of June, it actually traded sideways for a good 2 to 3 weeks before seeing a climb. And the last time we were oversold here in the second week of July, it only took a few days before we went up $700 or $800 from the oversold level. So oversold levels are reliable. It just, you cannot expect to moon overnight, and you can't expect to moon at all. There could be a bounce back to maybe the 200 MA or the 0.618 fib level, and it could happen within 3 days or 3 weeks, but it is still a reliable indicator as of late. I do think that Bitcoin, if we look at the overall volume, where is that? If I'll go to CoinMarketCap, because it is, it's a little more reliable than looking at a single exchange on TradingView. But if you go to CoinMarketCap and you go to volume and you go to historical data, you'll see that the volume is from what we saw in July and June, right? So if we go last 3 months, the volume is decreasing. June and July, we did see days, where we hit 30 billion, even 40 billion. On some days in June and July, you'll see, where was that? 45 billion here, June 26th. 39 billion June 27, 35 billion, and then we were consistently above 20 and 30 billion in July, and then by the end of July we started to taper off into the teens. So because of the volume, and volume dictates interest in Bitcoin, I do think it is more plausible that we retest this 21 EMA sooner rather than later, within the next 2-3 weeks, I would say. Obviously, I'm not a fortune teller, and we could get a surge in volume, and we are seeing that here. I mean, yesterday's volume was almost 20 billion, whereas August 12th was 13.5 billion. So, I mean, if this is the start of another wave of volume, fine. But based on what we've seen with the tapering volume, I do think that this retest is a lot more likely. And currently, we're at around 8,900 on the 21 EMA. Wouldn't be too bad, I mean, from where we're at currently, and it would actually provide us an opportunity to buy the dip. All right, that is the crypto market in a nutshell. I'm buying the dips. I have the levels sent out on the trade alerts in our premium trading group. Join if you want access to those. I will jump to the stock market right now. So the stock market took a freaking hammering yesterday, right? Took a beating yesterday. We were down 800 points, I think, on the Dow. It is not so bad today. I mean, you can't really call this a bounce back, but at least we have tapered off in terms of the beating that we took. It was the worst day that we've seen in 2019. And the story that's making big headlines is the yield curve. Now, the yield curve between the 2-year and the 10-year treasury note is basically when the 2-year note is giving you a better yield than the 10-year note. It's like me telling you, yo, I'll give you $5 and in 2 weeks, or I'll give you $3 in 10 weeks. Which would you take? Obviously, you're getting more money in a shorter amount of time. So the inversion, that happened, is the first time that it happened since 2007, and it usually signifies a recession. However, the headline is kind of inflated because this guy here, Mark DeCamber, on Market Watch, did an analysis of what happened the last few yield curves between the 2-year and the 10-year note, and you'll see that it actually takes quite a bit of time for a recession to happen. And not only that, but within a short amount of time, we actually see bounce backs most of the time. Now, recessions and crashes are actually outlier events. They don't happen all the time. So the few times that we did see that yield curve, we do have some mixed results, but it doesn't result in a recession all the time. You'll see that in 1978, it took a toll 3 months and 6 months later. However, 3 years, 2 years, and 3 years, 1 year, 2 year, and 3 years later, we have gains of 3%, almost 20%, and 25% respectively. And you could see the graph here. I'll leave it up on the screen so that you could check it out. But essentially what he's saying is it doesn't always amount to a recession. And if it does amount to a recession, that it is taken an average of 15 months after the inversion of the yield curve in order for that recession to take place. So it's not all doom and gloom, but the market tends to overreact to stories like this. And if you look at another indicator, which is basically consumer spending is actually up in July, and that defies other recession warnings that we've seen in the past. Rarely do you see the yield curve happen as well as other recession warnings and consumer spending go up. I personally believe that the stock market currently is tenuous, and we have, we're playing with all-time highs during a period when a lot of uncertainty is going on, like obviously between the yield curve, but then there's the ongoing China-US trade war, etc. So the German and Chinese economic reports that came out. So there's definitely a lot of uncertainty. And when there's uncertainty while you're at all-time highs, that is where the danger comes in. If the uncertainty is when the markets are stable and moving sideways, there isn't that much fear that a catastrophic event will happen. However, on the stock market, we did take profits on UWT, which is the ETF that follows crude oil at a 3x magnified leverage. And we took profits at around $13, and it is now bouncing off of support again. And I'm looking to get back into this for sure. We keep playing these swings, have been playing it for a few months. One of the easiest gainers in the stock market that we've made for a while. And I do send these out in the trade alert. So again, if you want access, sign up. 2U, which is an educational company, took a dive back here at the end of July 31st on earnings reports, and we bought basically at the dip after finding support, at the level that it dove from. And it also coincided with long-term support that we saw back here in May 2014. So I was comfortable buying this dip. We bought the dip, and we are now up on 2U from buying this dip. We are up 42%. And I now have a trailing stop, and basically you're playing with house money, right? If it keeps going up, the trailing stop will follow it. And then if it declines by a certain percentage, say 5 or 10%, obviously the more you're up, the wider your stop limit can be. And so, if it does fall below a certain range, then you end up taking profit automatically. Gold is just absolutely killing it. We entered gold at around 133, and it is now currently a 143. This is GLD, which is an ETF that follows the gold prices. So it's not the 143 is not the price of an ounce of gold. I wish, but no. And I'm currently out mostly in cash, waiting to see what the market yields. No need to get greedy. You do have to be malleable and dynamic, just as dynamic as the market is, and not try and go against the grain. Obviously, there are times when you do trade the counter trend, and you can by shorting or whatever, but when the market is uncertain in either direction, cash is also a position. Always remember that, no matter which market you're dealing with. Anyway, that is it for this video. If you liked what you see, leave a thumbs up, leave a comment in the comment section below. Let me know where you think the markets are going, whether crypto or stocks. Join our premium trading group. Link is in the description. You also, if you're a diamond trader or above, get access to the 0.03 Bitcoin drawing that I do in the beginning of every month. You are automatically enrolled. If you want one-on-one training with me, I take a maximum of 10 people per month. So check with me, see if I have any spots, because those spots go quick. And we usually do those over video conference. You get 3 video conferences a month. That same link is also in the description. I'm in the process of creating my new website or updating my website, and you'll be able to engage with me on that site, whether you want to sign up for the trade alerts or contact me or whatever, but that's going to take a while. Subscribe to the channel if you haven't already. Hit that notification bell. Stay safe out there, traders. Peace.